Hello everyone and welcome back to It's Crypto's trading channel. In this video I'm going to be performing a multi-time frame price action analysis on the situation we are currently seeing on Atom USDT. Things are getting interesting for a potential swing trading opportunity. So as always, we're going to keep this video as educational as possible. Top-down price action analysis. So first things first, tomorrow evening, very important news at 7 p.m. GMT is the Fed interest rates decision. Now, we all know that BTC is making a small bounce. If you watch my Bitcoin update, then you would all know that I have a bearish bias, and I think this. Let's just quickly look at BTC again. I think that this bounce that we are seeing on BTC is just a minor correction, and we are going to see a dump tomorrow on the news, possibly into this area here. There are lots of high leverage longs opening at the moment. A lot of retail traders opening high leverage longs because they think this is the bottom, when in fact you can clearly see this is just a correction. This impulsive move is a lot faster and a lot stronger than this retracement move, and I do expect a dump tomorrow on the Fed interest rate decision news into this area of liquidity. So with that being said, obviously if BTC does dump, then we can expect altcoins to follow. So back to Atom USDT. The setup that we are going to be looking at capitalizing on Atom, starting with the monthly time frame, what we can see is the monthly time frame is testing this extremely strong level of monthly supply exactly at this zone. Now, why is this monthly supply? Because you can clearly see strong rejection here, 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 and once again with this current monthly candle, which still has 6 days left to close. Now, if this monthly candle closes bearish, we have a huge double top on Atom at all-time high prices. This level is an extremely strong level for sellers, and we can expect a reaction at this zone. Going down on the weekly time frame, so what we can see here from a weekly perspective, you can clearly see the strong level of resistance that we've already identified. You can identify it again, once again here, and we have this double top on the weekly time frame. Also on the weekly time frame, what we have is this bearish engulfing candle, which engulfed the previous weekly candle. So this candle pattern formation is also known as a railroad track, and this is a bearish candlestick formation. What we can also see with the previous weekly candle is that it closed below this level of previous resistance, which should have acted as support. So this is the zone that I am referring to. So exactly this zone here was previous resistance. We made a rejection and moved to the downside. Once again, rejection, moved to the downside. Then we broke above this zone. Therefore, as you all know, this previous resistance should have acted as support exactly at this zone. But in fact, the market broke below it with this bearish weekly engulfing candle. So after we broke below it, the market is currently retesting previous resistance as once again resistance, and we can expect a rejection from this zone and the market to come and fill in this wick on the weekly time frame. Now, this is a pattern that I speak about in a lot of my videos. If you follow our videos, you will know that when the market prints a weekly candle like this with a large bearish body and a large wick, you can expect the market to fill in this wick, especially with our bearish bias from the monthly time frame. So here on the monthly and weekly time frames, we are clearly bearish, and we do expect a deeper retracement. With that being said, going down on the daily time frame, the market has recently broke below all of this support that we have across this area. So we have a clear level of support at this area. We have multiple rejections, rejection again here, and then the market made this bearish impulse to the downside, breaking below this level of support. Followed by this impulse, the market has made a nice retracement to retest previous support as new resistance. If we want to measure the retracement, what we need to do, we need to take our Fibonacci from the high to the low of the bearish impulse, and what we can see is the market is currently testing exactly the golden ratio, the 0.618, giving us a nice confluence of resistance at this zone. So with our bearish bias on Bitcoin and our multiple bearish patterns that we have here on Atom USDT, I'm expecting the market to make the continuation to the downside and make a new lower low from a daily perspective. Our downside target will be the Fibonacci taken from the corrective high to low, which is exactly this point here to this point here. The minus 0.272 fib will be our downside target. And you can see this lines up pretty nicely with the structure that we have here with this support zone. We could always bring it up to this level. This is still a nice trade. So this is our downside target, and this is the move that I expect Atom to make in the short term. Now, how are we going to be looking for a potential entry on this setup? So if we drop down to the 2-hour time frame, we can see how the market is currently respecting this descending trend line. So we have a clear descending trend line exactly at this zone, which the market is respecting a number of times. But what do retail traders get taught to do? They get taught to trade breakouts. Now, if you look closely here on the daily time frame, the market has printed this bullish flag. We have a clear bullish flag exactly at this zone under this trend line resistance. You can clearly see this bullish flag. So here's the flag and here is the pole, and usually the market will make a breakout above this zone, and this will induce buyers into the market. We have a strong level of structure exactly at this point, and we have a directional our directional bias, is bearish because we have taken the direction of the market on higher time frames. Now, if you follow our videos again, you will always know the monthly, weekly, and daily time frames are the best time frames for the direction of the market, and the 4-hour, 1 hour, and 30 minutes are the best time frames for an entry. So with that being said, we are clearly bearish on the monthly, weekly, and daily timeframes, but here on the 2-hour timeframes, we are potentially bullish if we see a breakout above this zone. So what will retail traders do? Retail traders will open longs on the retest of this zone, and it is likely we go to push above these highs and dump back down into this area of liquidity. So this is exactly the type of pattern that we are going to be looking for tomorrow with students. If the market breaks above this high, we will be looking for a textbook manipulation strategy pattern and potential entry to capitalize on this push to the downside as the market maker goes to hunt the liquidity that is in this area. If the market fails to break above this zone, we will still potentially look for a shorting opportunity. The market is always providing opportunities. We do have this bearish daily setup, so we have plenty of opportunities to be entering this trade. We will just monitor price action throughout the day tomorrow and look for a valid entry according to our rules. Don't forget, the Fed interest rate decision isn't until 7 p.m. tomorrow evening, and it's highly likely that the market as a whole, the crypto market as a whole, continues this bullish trend to trap as many retail bulls as possible. The higher it goes, the more liquidity it will gather. Once again on BTC, we can see the market has formed this head and shoulders formation with the left shoulder, the right shoulder, and the head. Tomorrow, when the market breaks above this zone, a lot of bulls will enter this market. And again, we will be looking for this move to the downside into this area of liquidity. So we have some nice potential setups lining up for tomorrow in the crypto market. Remember, trading is reactive, not predictive. Let's wait to see what the market shows us.